It's now becoming technology focused, and yet 40 years ago, we were collecting data. It was just not being collected and used. You're just throwing it away. No one had any appreciation of the value data could bring. And so today's a new world, and we can optimize it so much easier.
Hello, my name is Jason Reichl, and you're listening to Risk Management Brick by Brick. I'm fascinated with people who are helping build and maintain the physical world around us. On each episode of this podcast, we'll dive in with a risk manager, speak to them about how technology plays a role in this process.
Alex, thank you for being on Brick by Brick, joining me at RISKWORLD. I'm really excited to talk to you. I'm a data nerd myself. I'm a technologist for my entire career, so I'm excited to dive into that. But before we get started, did you always say, hey, I want to work here for a living? Like, how did you get from where you started to here?
In insurance?
Yeah.
Well, I fell into it like most people do. It's the best way to gain a career is to fall right into it. But I am also a legacy. So my mother was a property broker. And so when I was looking for a job, it seemed the right place to go.
Yeah.
and
then tell me about the evolution of your career. How has it been? Where have you?
Oh, it's been terrific. I mean, I think that I've lived in some of the greatest places in the world and also been able to work on some of the greatest clients. So I started my career in San Francisco, and then I moved to Zurich, Switzerland, and I ran the continental European market for several years. And then I came back to the US, and I was running a national position in New York, and then did Latin America and Asia Pacific. So
That's really great.
I've been all over the place.
I like that insurance is like a worldwide thing, right? You get to go all over the place, get to meet people. And like, my dad's a longshoreman. I grew up in Seattle. I went to school in Austin, live in San Francisco now. So similar backgrounds, but it's nice to do something that's technology focused, but also that's helping, build the world around us constantly.
Completely. I mean, it's now becoming technology focused, and, yet 40 years ago, we were collecting data. It was just not being collected and used. You're just throwing it away.
Yeah.
No one had any appreciation of the value data could bring, right?
Yeah.
And so today's a new world, and we can optimize it so much easier. So
yeah, let's start with that then. So Alliant data is a big thing. You're helping spearhead that. Why don't you kind of walk through what that data strategy looks like, what you guys are trying to do with it and uncover for your customers?
Well, we're a specialty company, so we start there, right? So as a specialty company, for all the years we've been around, probably not collecting it for 100 years, but definitely over the last 25 years, we've been collecting data in industry, right? So we're a specialty company focused on industry, and we've been collecting data for all of those years. And so what we're doing is putting it to work for our clients, for prospects, for people to solve problems around insurance solutions.
Yeah.
It's been remarkable to see how much data we've actually been able to leverage by just looking in.
Yeah, like 10 years ago, everyone was talking about collecting data was a big thing. And now it's like, well, we have this mound of data. What do we do with it?
Exactly.
So what are some of the interesting projects that you're working on with customers to leverage that data and provide it?
Yeah, so we've built a proprietary analytics tool. So we put our data to work in our industries alongside those analytics tools. So in construction, we're looking at the different levels of casualty, but the data...
Casualty seems to be a big thing I'm hearing from everyone.
Well, because casualty is easy. Yeah. It is, you're looking at losses. So if you have losses and you have exposure, you get to have a lot of data around how you're going to structure programs and build good insurance solutions. If you don't have any losses, it's less interesting. You kind of need the losses. But when you're able to take that data and then couple it with experience over all these years, it creates trends. And when you use those trends, you put those trends to work. They're pretty unique if you can do that within an industry and have solid data around it. Right.
And so, that brings up underwriting. That brings up a lot of different conversations around data. Some of the stuff that our customers want to understand is around generative AI and how that plays a role in data. And is it now or is it not? Like, where is that playing a role within this structure?
I think we were just talking about this. It's an every single day conversation, right?
Yeah.
It used to be just kind of out there. Now it's an everyday conversation. Everybody's talking about AI. So we're taking an approach toward it.
Yeah.
Where can we safely use it? Where can we make sure that we're applying how it can help us understand some of our data?
Yeah.
But so we're definitely in there, but we're not yet
developed models and stuff for yourself.
Not completely, right? We're still using some of the more traditional and dependable.
Yeah, I would say that's probably the smart
results, right?
Yeah.
When you're talking about losses in people's data and how they build programs, you're going to take a bit of a conservative approach.
So let's take construction as an example. So as you're looking at this data, how are you helping organizations restructure their programs? What kind of things are you putting into place for them? What are some of those trends that you're seeing?
Yeah, well, so the trends are talking about how much limit they should buy, how much limit and how much risk they should retain, right? So it is all about the analytics outputs tell us two things. One is how much can our clients actually retain and waive risk, and then where are they comfortable?
Yeah.
Right. So you could retain a whole bunch, but you may not be comfortable retaining that whole bunch. So where are you actually comfortable after we've determined what you can tolerate? And then we're taking their losses and exposures and we're running it through different levels of simulation so that we can see where's your right, using that attachment point you're comfortable with.
Yeah.
Where's the right level of cost and then right level of limit to purchase, and our analytics help us see that.
And it's really giving a sense of transparency to the industry as well, right? Because I think with this data, you can now show like, no, this is based on the project scopes you have, based on the work you're doing. Here is the right programs for you. And it's a more trusted relationship across, because that seems to be a theme that I keep hearing at the risk world. For me last year is, the transparency between all the way from the carrier down to us, at the risk management is becoming a lot clearer and a lot more, I would like say, we're constructing programs together now. We're not just getting our insurance from someone. We're actually having a lot of conversations.
Totally. Educating our clients through data, through their own results, right? It's not like we're just, sometimes we have to use, augment data.
Yeah.
But for the most part, we're using their data and then we're educating them on how that data is going to work for them. So they're walking into a room with more understanding about their own program and what the outcomes should look like, which makes that transparency happen. Right?
Yeah. And what we've noticed is that as this data is being utilized, roles of risk manager are becoming more senior within organizations too. And the expanse of the realm is opening up. We talk about cyber, we talk about all this other stuff. And, a lot of risk managers in construction don't have their hands around that yet. So how are you going about educating those individuals in order to be successful in these emerging areas?
Right. Well, so we are using data as a platform across every one of our businesses and specialties. So cyber and areas of that property, we hit a hard market. We have a lot of tools that we can use to help clients. Were hit with valuation increases. They were hit with, transparency on their portfolios. So we had tools that we were able to utilize for them to make better decisions. And, you're totally right in that they're expanding in their world of responsibilities, and their world is becoming more complex, right?
Yeah.
It's not an easy world when you are faced with all these different challenges.
The hack can happen really quickly too.
In a minute, right?
Yeah.
And you're like, okay, I was ready.
Yeah.
And if you're ready, so we have consultation and we have analytics that we use for our clients around cyber, which helps to educate those risk managers, CFOs, CIOs. It's pretty expansive.
Yeah. What do you see like as big trends or things that you're trying to point people to and say like the next 24 months, like next RIMS, where do you want to see your programs be? Where do you want to see the industry be? Because I feel like even my few years in this industry, everything like has been accelerating. It feels like there's more technology going into place. There's more data being used. There's more talk about holistic approaches. So where do you think 12 months from now, if you had to look into a crystal ball, that we might be at?
Well, I think we're going to expand across all of our platforms. So we have lived in the retail P&C space. We need to take a look at how can our data help us across our employee benefits platform, how it can go across our programs platform. How do we help to make right decisions for our clients and for the firm, right? So how are we going to grow in the world of data?
Yeah.
And what of our data can we use to solve for problems that we're going to see in the future? And listen, the next 12 months are going to be tough in some areas. We'll see relief in some and tough in other areas.
Yeah, like commercial construction is down, but construction overall is up, right?
Yeah, because infrastructure is up, right?
Right.
And I think you're in election year, you're going to see more money funded so that there'll be more projects, but there'll be more infrastructure types versus, vertical construction.
Yeah, absolutely. All right. So with the market you're saying is changing, we're heading into maybe a period of some change. Some other industries are thriving. But what are you guys doing to help your customers understand what that's going to look like and prepare for it?
Right. We have a lot of ways of communicating, as do most brokers out there. We'll talk about trends. We'll talk about how we see the market going up and the market going down. But I'll tell you that I think auto is really the concern. It's going to be the concern for the next foreseeable future because the carriers can't get enough rate to make it profitable because the jury verdicts are, just running away and the cost for that. And the structure of how auto plays a part is very different than any other line of business.
Yeah.
Right? So it's become catastrophic, and yet it's still treated on a very per occurrence basis. So I think that's an area we're trying to educate our clients. Preparedness, we talk about it all the time. They need to be prepared. The best prepared client is the one that goes to the top of the heap, and we get the best results. So it is use the analytics. It is make sure your submission information is good. Make sure that, you have a great handle on who you are as a company and
build holistic programs. Don't just like,
and risk management manager you are, right? And it is all about holistic building and see the best bang for your buck, really, and understanding what you should buy when you should buy it. So.
Awesome. Let's play a little game. It's called Risky or Too Risky. Rapid fire questions. You tell me if they're risky or too risky for you. This is how we tell if you're a real risk manager or just posing as one. So we're going to see.
Well, nothing's going to be too risky, so I'm probably posing.
You're tempted to climb onto the roof of your house to retrieve a lost item without any safety gear. Risky or too risky?
You're pretty risky.
Pretty risky. Okay. You're thinking of swimming in a lake without checking if there are any warning signs for dangerous stuff in the lake.
Anything?
Yeah.
That's probably too risky. I don't want to get eaten by those alligators. Snakes.
Where do you live now?
In Austin.
Oh, in Austin. Okay. Yeah. No alligators there right now.
But there's a lot of snakes.
Well, a lot of snakes. And Greenbelt is scary for snakes.
Very.
You're about to go on a hiking trail without telling anyone of your plans or estimated return time. Risky or too risky?
Oh, that's terrifyingly risky. That's too risky.
All right. You passed. You're a risk manager. Closing, before we go, any final thoughts, any advice that you would give to someone entering into the industry?
So, those entering into the industry,
yes.
Engage. Like my number one advice to people that are coming into this industry is engage. It has become very easy to, work Zoom.
Yeah.
And this is a people industry. So to learn what we're talking about, to learn more from your risk managers, to learn from your colleagues, you have to be engaged. You have to be in each other's faces. You have to meet and greet and understand them. It's a network of business colleagues, not. So I say
it takes an army to build the world, right? So I think that's a really sound piece of advice.
Yeah, for sure.
Well, thank you very much for joining me. I appreciate it.
So nice to meet you.
Nice
Thank you.
Risk Management Brick by Brick is brought to you by TrustLayer. Find out how TrustLayer manages risk so that the people can build the physical world around us. Head over to trustlayer.io. And then make sure to subscribe to Risk Management Brick by Brick on Apple Podcasts, Spotify, or wherever you get your podcasts. On behalf of the TrustLayer team, thank you for listening.